And today I just wanted to go over auto insurance and what kind of some of the things are and what some of the things are not, just to make sure you understand auto insurance a little bit more. So the first thing we want to talk about when it comes to auto insurance is bodily injury. So bodily injury refers to the amount of coverage that we have if we get into an at-fault accident for either one person or multiple people. So for example, if we have what's called 100-300 coverage, it's $100,000 if you were in an at-fault accident for injury. If you hurt someone else, if there was multiple people involved, then it would be $300,000. But that's what the bodily injury is going to refer to, is the amount of injuries to either one person or multiple people. The next one's going to be property damage. Property damage is just like it sounds. It's the amount of property damage that we have going on. So let's say if you have $100,000 in that column there, they're going to be responsible for up to $100,000 of damage that you might have caused. The next two big columns are going to be uninsured and underinsured. So uninsured, if an uninsured driver hits you, and let's say it's just you in the car and you have that same 100-300 coverage, you have $100,000 of personal injury coverage. This does not include the car. This is just if you were hurt. So, and if let's say you had a couple passengers in the vehicle with you as well, it would be $300,000 worth of coverage to cover all the people in the vehicle. Now, underinsured is going to refer to people that have insurance, but it's not enough insurance to cover your personal injuries. So, for example, let's say a person hits you that only had $25,000 on the personal injury side, and you suffered $100,000 worth of injuries. They would collect the $25,000 from the other person that hit you, and then the remaining $75,000 would come out of your underinsured coverage. So if you're hit by an uninsured driver, those coverages are just reflective upon if there's injuries. If there's no injuries, for example, let's just say your car was hit and they didn't have insurance, that would still be what we would consider a collision on your end, so there would be a deductible. So for example, let's say we had a $500 deductible. So to fix your car, it would be $500. That same thing would take place if you got in an accident and you were at fault. It would be $500 to fix your car. Now, let's say you got in an accident and you didn't want to repair the damage on your car, then there is no deductible. That deductible there is for collision on your end. Okay, same thing, you would pay it if it hit by an uninsured driver. Now, if you're hit by somebody that's just underinsured, their insurance would take care of your vehicle. And then also, of course, injuries up to the limits that they have. And then if it's not enough in the injury limit, then that's when you can use your underinsured, the portion of your policy. So the collision deductible is basically a collision. So either you're at fault or you were hit by somebody that did not have insurance. Comprehensive is going to be basically everything but collision. So let's give some examples. So comprehensive is going to include, I got a crack in my glass in the windshield. The car was hit by hail, storm. I hit a deer. Those are things that are going to be considered comprehensive. So when you're looking at your auto policy, if you have an older car that just has liability on it, if you were hit by an uninsured driver, there would be no coverage for your vehicle, because that all it does is do injuries. Now, if you want coverage for that vehicle, then you need to have collision on there as well. But if you're just searching liability only to keep the price down, obviously, as much as possible, you are taking the risk of your car not getting fixed. Now, sometimes we'll tell people like collision's probably not a smart idea for a 20-some-year-old vehicle, even if it's low miles, due to the fact that it probably doesn't have a lot of worth. Because insurance companies are not going to pay to fix the car if it's over the value of the vehicle. So for example, if there's $10,000 worth of damage to your vehicle and they've rated the vehicle, let's say at $3,000, the max payout's going to be $3,000. So just to keep that in mind, when you do take risk, obviously your price is going to go down on your insurance, but you are taking more risk. So if something bad does happen like that, you are going to be responsible for it. Some of the other coverages are going to be towing and roadside assistance. Pretty self-explanatory, but if you need a tow or you need roadside assistance, that's what that coverage is for. Rental car reimbursement's a big one. So if your car had to go into the shop because of an accident, rental car reimbursement will pay you so much per day, up to 30 days is typically the limit. So for example, if it's 30 or 40 or $50, you could get that much per day. Now it is reimbursement. So for example, if you put a rental car, if you get a rental car, and let's say you needed it for 2 weeks, you pay that bill, submit the receipt back, and you will get reimbursed for the rental car. So for example, if it was $20 a day is all that they charged you for 2 weeks, you're looking at $280 bill. You would send us, like for example, in my agency, you'd send that bill to us and we'll submit that bill for you to get reimbursed as quickly as possible. The next one, safety glass, what they call deductible of waiver. So that comprehensive is where glass coverage would come into play, but there is an opportunity to pay zero for the glass if you choose to pay the premium for the waiver of the deductible. So, if, for example, if windshield may cost some of the newer cars $1,000 or so, but if you chose this option, you wouldn't owe anything. If you choose not to, you would still have your comprehensive deductible. Some of the other things that are available out there, they're going to have new car replacement. Let's say you bought a new car within the last couple of years, and instead of the value of the vehicle, you would just like to get the new car replaced. So let's say you bought a 2021 vehicle, you drove it for 6 months, it got totaled. Instead of getting a 2021, let's say a 2022 is available, they'll get you the new car and not taking into account how many miles are on the vehicle and things of that nature. Now, typically that coverage only lasts for 2 years or 30,000 miles total, whichever comes first. Some of the other things you can get are common or gap insurance on a new vehicle. So if you've gap insurance, basically if you have a loan on the vehicle, let's say you owe $20,000 and the vehicle was totaled at $15,000, there's that $5,000 worth of difference, and that's where gap insurance would come into play. If it's not available through your agency, make sure you check where you're purchasing the vehicle from or the lender. The lender might have that available as gap insurance as well if you're doing a refinance or anything on the vehicle. Something if you owe quite a bit of money or you owe more than the vehicle's worth, or you tend to put a lot of miles on the vehicle, let's say 25,000 miles a year or so, it's definitely something to look at, because a lot of times the value might drop faster than what you're actually paying the vehicle off at. There's all kinds of different coverages when it comes to auto insurance, so making sure you discuss that with your agent or somebody at a call center, depending on who you have for insurance, is extremely important. So make sure you take a look at that. And I wanted to thank you very much for your time on this episode. As always, if you could rate, review, or subscribe to whatever platform you're listening to us on, whether it be Spotify, Google, Apple, or any of the awesome platforms out there, I'd greatly appreciate it. And I look forward to seeing you on the next episode.